Hey guys, it's Bruce Stinger. Just wanted to go ahead and give an update with regard to the overall markets. So this week was kind of a crazy week, as the markets have been kind of that up and down. It's we got a lot of that this week. I mean, we saw the markets up, we saw the markets down, we saw the markets up, we saw the markets down, all in a single trading session. Kind of crazy. It's enough to shake an investor out of the markets. But what we did was we took a look at what our options were. And we looked at a couple companies that we looked at were two that I'm going to highlight here was Smith & Wesson. And I kind of gave my reasons last week in terms of why we liked Smith & Wesson. And to kind of recap on that real quick, it was a lot of talk about defunding the police. So a lot of Americans, they're worried about their safety and they're thinking to themselves, well, we got to protect ourselves. If we're not going to have the police around, we have to protect ourselves. So we saw a lot of the permits, the licensing for carrying a gun has increased by quite a bit. And that has positively impacted the business of gun makers like Smith & Wesson. And Smith & Wesson is one of the leaders in this industry. So we went ahead and instead of going ahead and buying the stock or going ahead and buying call options, we did something that allowed us that even if we were wrong on the direction and Smith & Wesson did not go up, we would still have an opportunity to make some money. And the other beautiful thing about it is that the stock doesn't have to go up. It could stay flat. It could actually even go down a bit, and we're still going to make money on our position. So we went ahead and did what we call selling puts. So we shorted the puts, have enough money in the account, enough capital in the account to go ahead. If we are assigned the particular trade, we'll take ownership of it, and our cost basis will be roughly about $16 a share the way we designed it. But I don't think we're going to get assigned Smith & Wesson, but if we do, we'll take it at $16 a share. Why not? And then there's some other things that we can do to go ahead and turn around and make a profit on it as well and increase our profitability. The other trade that we took a look at was a company called Slack Technologies. Ticker symbol is WORK. We actually put a position on this very similar to Smith & Wesson, where when we had a big precipitous drop to the downside because they came out with earnings, they hit the numbers oddly enough. But the thing about it is they did not meet the expectations of Wall Street when they talked about forecast. And Wall Street's a little bit worried. A lot of investors are worried that Slack Technologies caters to smaller businesses that have fewer than 100 employees. And a lot of those businesses that have been hit hard because of COVID-19 are the smaller organizations. And they're having a problem paying their bills. So that was kind of weighing on the mind of investors as they looked at the forecast in the future for a company like Slack Technologies. What Slack Technologies is doing, though, that's positive, is they started to bring on more enterprise type companies, which has been a safe haven for other companies that are in this space. So Slack Technologies is not only making efforts, but they've also made some groundwork in terms of picking up enterprise clients, which they feel will benefit them going forward into the future. So I went ahead when the stock went down. I did the same type of a trade. I went ahead and I shorted puts and brought in a huge premium into the account. And I did this for the October expiration dates. I don't know if I'll hold it this long or not, but I think I might just go ahead and cash out sometime next week. It just depends on what the stock is doing. If it breaks over $28, which it very well could, I will hold my position and I'll hold strong. If it doesn't, I'll go ahead and just cash out and take profits. But what we've been doing in this market is taking a look at great looking companies that have maybe fallen from grace from one factor or another. And Smith & Wesson and WORK, Slack Technologies, met the criteria for both of those plays. So the other thing that we've done going into the weekend, because you never know what the weekend's going to do, we put on insurance on our portfolios by being able to buy put options. So we didn't sell, we bought put options on the SPY, which is the overall market, the broad market, the S&P 500. And that gives us some protection as we go into the weekend if the market should go ahead and trade to the downside. So we saw a lot of that action going on. I think we're going to get a move back up, but you never know. I mean, we don't know what the market's going to do. So all we can do is control our own actions and behaviors. So we put insurance on the portfolio going into the weekend, and we'll probably pull that off sometime midweek, depending on what the market does. So anyway, hopefully you enjoyed it. Stay tuned for another video that I'm going to come out with very shortly. That's going to talk about my trade going into next week, what I'm taking a look at. This is Bruce.